I've been hearing a lot of chatter lately about how Warren Buffett's Berkshire Hathaway dumped nearly half of its Apple stock. Folks are losing their minds. Like it's the end of the world for Apple. But let me tell you, that's not how investing works, at least not in my book. I mean, sure, the guy is a legend, but just because he's trimming his position doesn't mean Apple's golden days are behind it. Far from it. Apple isn't just any company, it's not a one trick pony. This is a juggernaut with so many revenue streams that losing a bit of it from Berkshire isn't going to knock it off its stride. And let's be real, Buffett didn't completely bail out. They've got some hefty chunk of Apple shares still, so it's not like he's lost faith in the company. He's probably just reshuffling his portfolio to make room for something else. Maybe another big acquisition. The guy's sitting on a mountain of cash, so who really knows? But let's just zoom out a bit. The real story here isn't about Berkshire Hathaway, it's about Apple's future. And believe me, it's looking bright. We're talking about a company that's got an upcoming iPhone upgrade cycle that's going to blow people's minds. Every time Apple drops a new product, you see lines around the block. People can't get enough of it, and that's not going to change anytime soon. In fact, I bet my last dollar that this upgrade cycle is going to be one of the biggest yet, especially with the new tech they're packing into these devices. And don't get me even started on the Fed's rate cuts. A lot of folks are overlooking how this is going to play out for Apple. Lower rates means cheaper capital, which is a big deal for businesses across the board. But here's the thing, Apple is sitting on a cash pile so huge that even a slight reduction in interest rates could save them a ton of interest expenses. That's more money in their pockets, and they're going to put it to good use, whether it's through more share buybacks, dividends, or pumping cash into their already robust R&D. Sometimes I hear people say Apple's lost its edge and they're not innovating like they used to. But that's just noise. They threw $8 billion, yeah, $8 billion into R&D just last quarter. And what's come out of it? We've got an iOS 18 with AI, sure, but they didn't stop there. They've got updates for the iPad, the Mac, the Watch, and even the Vision Pro. And get this, they're working on a Mac Mini with the new M4 chip, which is packed with AI capabilities. Speaking of R&D, let's talk about Apple Intelligence. This is where things get really exciting. Apple's been quietly building up its AI capabilities, and they're about to unleash something that's going to change the game. Apple Intelligence. It's set to integrate AI and machine learning into their already incredible software ecosystem. I'm talking about something that could redefine how we interact with our devices. And the best part of it is, this isn't just some gimmick. Apple's got a track record of rolling out innovations that people actually use, and that's going to drive their services revenue through the roof. I did a bit of digging, ran some numbers, and I'm sticking with my valuation. I'm seeing a 30% upside from where we're at right now, which is huge. And let me tell you, that's not even counting the fact that Apple's constantly acquiring new companies to fuel their growth. Just last year, they picked up 32 AI startups. That's not playing catch up, that's setting the pace. You know that services is a huge part of Apple's business now. We're talking about a recurring revenue stream that's growing at a pace that's hard to ignore. And with Apple Intelligence coming into the fold, that's only going to accelerate. I wouldn't be surprised if we see Apple hit that $100 billion mark in services revenue sooner than expected. They've built a machine that just keeps churning out cash. And as an investor, that's music to my ears. Let's not forget the sheer loyalty of Apple's customer base. This company has a following that borders on the fanatical. People don't just use Apple products, they swear by them. And that's why every upgrade cycle is such a big deal. People will keep coming back, upgrading their iPhones, iPads, Macs, you name it. Apple's ecosystem is so tightly woven that once you're in, you're probably not leaving. That's a powerful position to be in. And it's one of the reasons why I'm so bullish on Apple's future. So here's where I think the market is really missing the mark. All the focus has been on what Berkshire did, but nobody's talking about what Apple's doing. They've just had another blowout quarter, beating expectations yet again. Their cash flow is insane, their balance sheet is rock solid, and they're continuing to innovate at a level that leaves the competition in the dust. This is a company that's firing on all cylinders, and the market's treating it like it's just another tech stock, but it's not. Apple's got a clear path to hitting a $4 trillion market cap by 2025, and honestly, I think that might be a conservative estimate. They've got everything going for them, the products, the brand, the loyalty, the financial strength, and the innovation pipeline. I mean, who else is in a position to even come close to that? The naysayers can keep doubting, but I've seen this movie before, and it usually ends up with Apple proving the doubters wrong again and again. And let's not overlook the fact that Apple is the most pro-shareholder company out there. They just last quarter bought back $26 billion worth of stock. That's on top of the nearly 900 billion they've returned to shareholders since 2012. This is a company that knows how to reward its investors, and they still got plenty of firepower left to keep doing it. So when you look at Apple's latest earnings, it's clear they're still on track. Revenue's up 5% year over year, and their EPS jumped from 1.26 to 1.40. Now, sure, not everything was perfect. iPhone and wearable sales have hit a bit of a speed bump. But let's be real, that's more about the economy than anything Apple's doing wrong. People aren't rushing to upgrade their phones right now because, well, times are tough. But that doesn't mean they won't be back in line when things improve. And the good news? Inflation is finally below 3%, which means we could see some positive shifts in the economy soon. If the Feds start cutting rates, and they probably will, people are going to start spending again. And when they do, Apple's going to be right there, ready to sell them the latest and greatest. Apple's PE ratio is expected to drop over the next few years, which means the current valuation is actually pretty reasonable, especially given their EPS growth potential. And here's something you need to know. When you're dealing with a company like Apple, with its massive ecosystem, it's almost impossible to find a true comparison. They're in a league of their own. So to all those out there panicking because Berkshire trimmed its position, take a deep breath. Apple's fundamentals haven't changed one bit. If anything, they're stronger than ever. This is a company that's built to last. And I'm not just saying that as a fan. I'm saying that as someone who watches this company crush it year after year. That's it. If you liked the video, please hit the like button and don't forget to subscribe.